What's up, everybody? It's me here. Today we're gonna talk about working at a hedge fund, specifically breaking down what it's actually like to work at one. So if you think that hedge funds are just these glamorous palaces where a bunch of traders sit around drinking coffee and making millions, well, this video will be an eye-opener for you. And if you're curious about what a day in the life looks like, what kind of people get hired, how you can break in without connections, or what a successful career trajectory could look like, keep watching because we'll be covering all of those topics and more. Alright, so let's start off by talking about what a typical day in the life is like. Now, the exact nature of the job will depend on which area you end up joining, but generally speaking, there are 4 main areas at a hedge fund: analyst, risk officer, quant developer, and trader. Analysts tend to do a lot of research, prepare reports, and help out with marketing material. Traders execute the investment strategy, risk officers manage and monitor risk, and quant developers build models and trading systems. However, all jobs at hedge funds are quite intense and require a lot of focus, responsibility, and dedication. So no matter which area you join, you'll be expected to hit the ground running. Now, each of these roles has their own path for career progression, but in general, employees are given opportunities to grow within the company. A lot of it depends on performance and being recognized for the contributions that you make. Now let's talk about what hedge funds actually look for in candidates. The exact requirements will vary based on the position, experience level, and the team you're rejoining, but there are some common traits that all hedge funds look for. First and foremost, they want critical thinkers. People who are able to take a step back from the daily hustle and bustle and really analyze the market and economic conditions to see the bigger picture. Hedge funds also look for systems builders. These are people who are able to take complex data sets and build models and strategies that can generate profitable returns over time. Finally, hedge funds want people who thrive under pressure and are able to make quick decisions in fast-paced environments. This means being able to stay calm and level-headed when things get hectic, which, let's be honest, they will, and being able to perform well under tight deadlines. Speaking of which, let's talk about the day-to-day responsibilities. Once again, this will vary depending on the role, but in general, employees at hedge funds are responsible for a lot. Analysts often have to put in long hours researching markets and preparing reports for senior management. Traders are responsible for executing trades and managing risk, while quant developers focus on building models and improving existing ones. Overall, employees at hedge funds need to be able to multitask and switch gears quickly. It is not uncommon for employees to be working on multiple projects at once and to have to adjust priorities on a dime. Now let's address the elephant in the room. Yes, hedge fund employees do make a lot of money, especially the traders. But this comes with a lot of pressure to perform. Hedge funds are highly competitive, and employees are expected to always be on top of their game. This means being prepared to work long hours, deal with stress, and constantly prove yourself. And it's not just about making money. Hedge funds also want their employees to be ethical and maintain a good reputation. This means being honest and transparent in your dealings with clients and other stakeholders, as well as following all applicable laws and regulations. So now let's talk about how you can break into the industry without having connections. Now, I know what you're thinking. Isn't everyone in the industry connected? Well, yes, a lot of people are. However, there are still ways to break in without connections. You just have to be willing to work hard and stand out from the crowd. One way to do this is by building a strategy portfolio. This is essentially a collection of your best trading strategies and research that you can share with potential employers. You can do this through a variety of channels, including your own website, GitHub, or even online forums. Another way to stand out is by publishing your ideas in academic journals or industry publications. This is a great way to get your name out there and show potential employers that you're serious about your craft. You can also participate in online challenges hosted by platforms like Quant or Kaggle, where you can compete against other traders and investors to see whose strategies perform the best. By participating in these challenges, you'll be able to gain recognition in the industry and potentially make connections with other traders and investors. Finally, you can also network with people in the industry by attending conferences and meetups. By putting yourself out there and meeting new people, you'll be able to learn about new opportunities and potentially make connections that can lead to job offers down the line. Okay, So now let's talk about the two biggest myths surrounding hedge funds. First, many people believe that hedge funds are only for the ultra-rich. Now, this may have been true in the past, but today, there are plenty of opportunities for people from all walks of life. In fact, many hedge funds actively seek out employees from a variety of backgrounds and experiences. That's because they understand that diversity of thought is crucial for making sound investment decisions. Second, many people believe that hedge funds are highly secretive and closed off to outsiders. Well, this is also changing. While it's true that hedge funds must protect their proprietary information, they also recognize the value of transparency and openness. Many hedge funds are now publishing their research and analysis online and are even hosting events and webinars for the public. So now let's talk about the reality versus expectations. Like I mentioned earlier, working at a hedge fund can be very rewarding both personally and professionally. Employees are challenged to think critically and creatively, and they're given the opportunity to work alongside some of the brightest minds in the industry. The compensation is also highly competitive and can be very lucrative, especially for traders. However, it's important to remember that with great rewards comes great responsibility. Working at a hedge fund can be extremely stressful and demanding. Employees are expected to perform at the highest level at all times and to always be ready for the unexpected. It is not uncommon for employees to work long hours and to have to make tough decisions with limited information. So if you're considering a career in hedge funds, it's important to be aware of both the rewards and the challenges. Alright, so now let's talk about the salary. Now, the compensation for hedge fund employees varies widely depending on a number of factors, such as experience, education, skills, and the specific role. However, according to Glassdoor, the average annual salary for a hedge fund employee in the United States is approximately $86,000. Keep in mind that this figure can range anywhere from $50,000 to $200,000, depending on various factors. For example, traders typically earn the highest salaries due to the high stakes and high pressure environment they work in. On the other hand, administrative and support staff typically earn lower salaries. It's also worth noting that many hedge funds offer lucrative bonus packages in addition to base salary. These bonuses are typically based on the firm's overall performance as well as the individual employee's contributions. According to some estimates, hedge fund traders can earn bonuses of up to 40% of their base salary, although this can vary widely depending on the firm and individual performance. Alright, so finally let's talk about how you can stand out as a candidate. When applying to hedge funds, it's important to remember that these firms receive a high volume of applications and can afford to be very selective. This means that you have to be willing to go above and beyond to show employers why you are the best candidate for the job. So how can you do this? First and foremost, make sure your resume and cover letter are top-notch. They should be tailored to the specific position you're reapplying for and highlight your relevant skills and experience. Be sure to use keywords from the job description and quantify your accomplishments whenever possible. For example, instead of saying I increased sales, say I increased sales by 20% in 1 year. Next, consider doing an internship or working part-time in the financial industry. This will give you valuable experience and make you more competitive in the job market. Finally, don't underestimate the power of networking. Attend industry events, connect with people on LinkedIn, and reach out to recruiters specializing in finance. By putting yourself out there and building relationships with others in the industry, you'll be able to learn about new opportunities and potentially make connections that could lead to a job offer down the line. And don't forget to subscribe so you never miss out on any future videos. Stay tuned for more awesome content. Thanks, and have a great day.